वेलकम टू वी लर्न में आपका स्वागत है। सब्जेक्ट इंटरनेशनल बिजनेस फाइनेंस, सेशन नंबर 8। टॉपिक कवर्ड इन दिस सेशन: ओवरव्यू ऑफ यूरो मार्केट, कंसेप्ट ऑफ यूरो मार्केट, सप्लाई एंड डिमांड ऑफ यूरो करेंसी मार्केट, बैंकिंग एंड रेगुलेशन ऑफ यूरो मार्केट, ग्रोथ ऑफ यूरो मार्केट, pricing of euro market, interest rate policy of this market, policy of euro market and its impact, and now overview of euro market. Historical overview: the origin of supply and demand for offshore banking. Onshore banking regulation बूस्ट द ऑफशोर मार्केट। ऑनशोर बैंकिंग जो थी उसने ऑफशोर बैंकिंग को जन्म दिया। द ऑफशोर मार्केट इंड्योर एंड ग्रोथ ऑफ द यूरो करेंसी मार्केट। दिस इज द ओवरव्यू टू इम्प्लीमेंटेशन ऑफ यूरो मार्केट इन द वर्ल्ड। एंड नाउ इंट्रोडक्शन: प्राइसिंग ऑफ यूरो करेंसी डिपॉजिट्स एंड लोन्स। Pricing in the case of one currency and two financial centers. Can offshore and onshore market coexist? The impact of capital control and taxes. Market share and pricing in competing offshore centers. The general case with many currencies and financial centers. Policy matters, private enterprises, concern of depositors, concern of borrowers. Policy matters, public policy maker. Offshore market and macroeconomic stability. Could the offshore market expand indefinitely? Approaches to regulating offshore market. Competing for markets, US policy initiatives. जो इसका कॉम्पिटेंसी है वो यूएस पॉलिसी इनिशिएटिव से है। ऑफशोर मार्केट, यूरोपियन पॉलिसी कंसर्न। दिस इज द ऑल ओवर ओवरव्यू ऑफ यूरो मार्केट। एंड नाउ द यूरो करेंसी मार्केट। द यूरो करेंसी मार्केट इज द मार्केट फॉर डिपॉजिट्स प्लेस्ड अंडर ए रेगुलेटरी रिजाइम different from the regulation applied to deposits used to execute domestic transaction. जैसा कि आप जानते हैं यूरो करेंसी मार्केट क्या है, मैं आपको इसकी स्मॉल हिस्ट्री बताना चाहता हूं। यूरो करेंसी और यूरो मार्केट जो है वो 11 यूरोपियन नेशंस का एक ग्रुप है। उस ग्रुप ने एक बैंक को स्पॉन्सर किया है जिस बैंक का नाम यूरो बैंक होता है, और उस बैंक से इश्यू की जाने वाली जितनी भी करेंसीज होती हैं वो करेंसी इन 11 नेशन में कॉमन होती हैं, लेकिन अगर इनसे आउट जाती हैं तो उस करेंसी के आगे या सामने हम यूरो वर्ड या यूरो परफिक्स यूज करते हैं। ये इसका टोटल कंसेप्ट होता है। यूरो जो है, यूरो मार्केट यूएस मार्केट से इनिशिएटिव है, क्योंकि सबसे बड़ा मार्केट, इंटरनेशनल मार्केट हमारा यूएस मार्केट होता है और सेकंड लार्जेस्ट मार्केट हमारा यूरो मार्केट। यूरो करेंसी जो 11 नेशंस हैं इनमें एक कॉमन करेंसी यूज की जाती है जिसे हम यूरो करेंसी कहते हैं। अब इसके ये थ्राइव्स क्यों हुआ, क्यों इतना ज़्यादा एक्सटेंड हुआ, क्यों इतना पॉपुलर है? क्योंकि इसमें बहुत ज़्यादा कॉम्प्लेक्सिटी नहीं है, लीनियंसी बहुत ज़्यादा है, फॉर्मेलिटीज़ कम करनी पड़ती हैं, अप्रूवल की कोई नीड नहीं है, एंड नेक्स्ट जो एडवांटेज है वो है इसका फ्लेक्सिबल इंटरेस्ट रेट। इंटरेस्ट रेट ये लेंडर एंड बोरोवर दोनों के लिए सेम रखता है और वो फ्लेक्सिबल होता है। दैट मीन्स एवरी 3 मंथ्स में रिवाइज किया जाता है। तो उस मार्केट का की करेंसी के बारे में यहाँ पर हम उल्लेख कर रहे हैं. द यूरो करेंसी मार्केट इज द मार्केट फॉर डिपॉजिट्स placed under a regulatory regime different from the regulations applied to deposits used to execute domestic transactions. It owes its existence to differences in national financial regulation combined with declining barriers to international capital movement. In effect, it is a parallel market in competition with the traditional domestic market. Sectors of the international money market: currency dimensions, USS, and that means pound and dollar; onshore US bank deposits, US treasury bills and bonds, US corporate bonds, all these are onshore market. UK बैंक डिपॉजिट, UK गवर्नमेंट बॉन्ड्स, UK कॉर्पोरेट बॉन्ड्स, ये आपके यूके के अंदर ऑनशोर मार्केट है. रेगुलेटरी डायमेंशन: ऑफशोर मार्केट के अंदर यूरो डॉलर डिपॉजिट्स, यूरो डॉलर बॉन्ड, कॉर्पोरेट एंड सॉवरेन इश्यूअर्स. एंड पॉन्ड की अगर हम बात करते हैं तो यूरो पॉन्ड डिपॉजिट, यूरो पॉन्ड बॉन्ड, कॉर्पोरेट एंड सॉवरेन इश्यूअर्स. तो इस तरह से ऑनशोर और ऑफशोर का क्लासिफिकेशन और इन बिटवीन रेगुलेटरी डायमेंशंस जो है इनके बीच में होती है. Origin of supply and demand for offshore banking: the euro currency market evolved through a combination of forces. The supply and demand for euro dollar had always been present. The innovation came in the mid 1950 when bank elected to lend these funds within Europe rather than invest them in the US money market. The demand for euro dollar further multiplied when the Bank of England restricted the external use of sterling in 1957. Offshore banking regulation boosts the offshore market. Under Regulation Q, the Federal Reserve established ceiling on the interest rate that banks could pay on deposits. To reduce the US capital outflow, more regulation were imposed in the 1960s. The interest equalization tax taxes US purchases of foreign securities. The foreign credit restraint programs limits the volume of bank lending with foreigners. Onshore banking regulation boosts the offshore market. However, these regulations only further encouraged borrowers to investigate the euro currency market. European governments also experimented with capital control in 1970s. Both Germany and Switzerland imposed regulation to try to limit the non-residents' demand for their currencies. Similarly, these regulations help to promote the non-dollar segment of the euro currency market. The offshore market endures even though many of the regulations that initially fostered the market had since been abolished. The euro currency markets have continued to grow and prosper. Today, we describe the innovation that permits the euro currency market to sustain its existence as unbundling, taking the exchange risk of one currency and combining it with the regulatory climate and political risk of another financial centers. Growth of the euro currency market: as in the onshore market, funds are deposited, lent, redeposited and relent in the euro currency market. The market has grown from essentially zero in 1960 to roughly $9.5 trillion on a gross basis and $5.5 trillion on a net basis in 1999. The US dollar is the main currency while Europe is the dominant region for Eurocurrency deposits. Pricing of Eurocurrency deposits and loans. Consider the case of one currency, the US dollar, and two financial centers, New York and London. Principal Eurocurrency deposits and loans. In the onshore market, interest rate, the demand D for fund depends on the required rate of return on available project. And this is the supply curve S, while the supply of fund depends on individuals' rates of time preference. And in the absence of transaction cost, the equilibrium is at the point of A. So when bank incurs cost X, equilibrium deposit rate RD, lending rate RL, and market size Q, then RL and RD, the difference is X, and Q is the quantity of the funds, and S is the supply curve, and D is the demand curve, and equilibrium is A. Since RD can be earned in the onshore market, the supply curve to the offshore market S will begin at RD. S dash is also a supply curve and D dash is also supply curve. Similarly, the demand curve for offshore fund D dash must begin at RL. Eurobank incur cost X star less than X, resulting in offshore deposit rate RD star lending rate and RL star market size of quantity Q star. So the relationship among onshore and offshore interest rate are RL greater than RL star greater than RD star greater than RD star. In other words, for the USS, New York lending rate prime greater than London interbank of offered rate LIBOR greater than London interbank bid rate LIBID greater than New York deposit rate. Pricing of Eurocurrency deposits and loans, onshore and offshore deposits and borrowing rates, percentage per annum as of June 20, 2000. Between the different countries like Canada, Euro area, Japan, Switzerland, United Kingdom, United States. Prime lending rate RL 7.50 in Canada, Euro area not available, Japan 1.375, Switzerland lend 4.75, United Kingdom 7, United States 9.50. Offshore borrowing rate LIBOR RL star for Canada 5.9063, Euro area 4.5313, Japan 0.1875, Switzerland 3.4375, United Kingdom 6.1875, United States 6.8125. Offshore deposit rate LIBID for Canada 5.8125, Euro area 4.4375, Japan 0.0938, Switzerland 3.3125, United Kingdom 6.0313, United States 6.6875. And onshore deposit rate RD for Canada 3.70, Euro area 3.04, Japan 0.03, Switzerland 3.29, United Kingdom 6.00, United States 5.99. Note, prime lending rate may not be comparable as lending practices may vary across countries. LIBID and LIBOR and deposit rate are for 3 months maturities. Can offshore and onshore market coexist? If the offshore market provides a similar service at a lower cost, what prevent all onshore transactions from migrating there? Offshore depositors bear the additional risk of exchange controls or taxes, plus the inconvenience of having deposits outside their home country. For borrowers, size and credit quality may act as barriers that restrict some firm from access to the offshore market. The impact of capital controls and taxes. When capital control are present, the inequalities RL greater than RL star greater than RD star greater than RD may be affected. When there are control on the movement of funds into the onshore market, it is possible that RD star less than equal to or less than RD. When interest rate ceiling or central bank lending guidelines lead to a storage of funds, borrowers may be prepared to pay RL star greater than RL. Market share and pricing in competing offshore centers. Consider the case of one currency, the US dollar, and several offshore centers, London, Frankfurt, Singapore, and Beijing. Market shares and pricing in competing offshore centers, interest rate shows in y-axis and quantity of funds shows in x-axis. And D star is the demand of various types of currency, and SL star or S star is the supply curve of various countries. Like as S star is a Beijing, S star Singapore, S star Frankfurt, S star London. The supply of fund to each offshore center depends on the assessed cost and risk of using the centers. Suppose each center incurred cost X star, which is equal to 0.25%. So 8.25% and 8%. Then for London, deposit rate 8%, lending rate 8.25%, and market size QA. Once the most efficient and least risky centers has set the price, the other must follow suit. And QD, QC, QB and QA are the quantity of fund that is offered by various countries at the rate of 8% and 8.25%. Now, currencies and many financial centers like USS, UAE, UKE, SF, SS, United States, NYUSS, NYIF, USS, United Kingdom, London, London dollar, and so on. Regular cost and political risk vary, exchange risk vary, and now arbitrage and interest rate parity. The interest rate differential between an onshore market and an offshore market has been analyzed using a loanable funds approach. Arbitrage and regulatory competition should keep the offshore interest rates for a single currency nearly equal. The interest rate differential between offshore instruments should conform to the interest rate parity condition. Policy matters, private enterprises. Depositors are concerned about the riskiness of offshore deposits. If a dispute arises between the depositor and the bank in a cross-border transaction, it is difficult to know in advance which country will claim jurisdiction and which legal precedents apply. A further complication concerns whether the offshore bank is organized as a separate subsidiary or a branch of the parent's bank. Policy matters. The simple distinction between assets and liabilities in banking frequently offers a useful guide for sorting out the complex legal issues that arise in a cross-border banking dispute. Borrowers are primarily concerned about the cost of borrowing onshore versus offshore. Note that the reference rate, prime or LIBOR, is only one element in the overall cost of bank funding. Borrowers may need to post some form of collateral, often in the form of compensating balances, paid as multiple of the reference rate or an addition X%, and put forward a lump sum up front fee. Policy matters. Borrowers also need to deal with the interest rate risk that is associated with floating rate Eurocurrency loans. Borrowers may choose to hedge this risk using euro-dollar interest rate, futures contract, or interest rate swap. For some offshore financial centers, the rise of the Eurocurrency market has been an important boost to employment and economic activities. For some major industrial countries, the rise was perceived as a threat to their ability to control macroeconomic conditions within their borders and perhaps even as a threat to the fundamental safety and soundness of the financial system. With the passage of the time, most of these fears have been put to rest either through new policy agreements or a better understanding of how the euro markets operate. Even though the euro currency market has no required reserves, the interaction of supply and demand for funds means that the specter of uncontrolled credit expansion made possible by an infinite or deposit multipliers is illusory. The Eurocurrency markets are now acknowledged as being fully competitive with the traditional onshore banking system. Policymakers have thus opted to factor in the euro markets when setting domestic monetary and financial policies. Eurocurrency interest rates are closely linked to those in the domestic money markets of the same currency because the two kinds of deposits are reasonably close substitutes for each other. In the Basel Concordat 1974, the United States and 30 other countries agreed to assume lender of last resort responsibility for their offshore banks. In 1980s, the Bank for International Settlement (BIS) announced an agreement among central banks requiring commercial bank headquarters within their territories to consolidate their worldwide accounts. In some cases, policymakers have elected to adopt their local regulation to compete head-on with the euro markets too. In 1981, the Federal Reserve Board amended its regulation to allow the creation of international banking facilities (IBFS). In effect, the IBF legislation creates an offshore banking environment located physically within the United States, although there are import restrictions on their operations. To create a level playing field in financial services, the European Union has sought to harmonize rules on withholding taxes and the disclosure of interest paid to depositors and shareholders. Such a policy will be detrimental to Luxembourg, which generates 20% of its GDP from its attractive financial services, but there can also be a wider impact on the cost of capital for European Union firms. And now do it yourself. What is the policy matter? And question number 2, what is Eurocurrency market? And that's it from session number 8. Thank you.